Shares in the Asia-Pacific region are falling today, and oil prices are also down by nearly $1 as COVID concerns in China are on the rise. The nation recorded its first virus-related deaths since May this year. China's central bank has also kept its benchmark lending rates on hold in line with expectations. Now, in Hong Kong, the Hang Seng is falling more than 2%, leading losses in the region. In mainland China, the index is down 1% today. Meanwhile, Brent crude is trading at $86 a barrel, and Goldman Sachs has cut its forecast for Brent oil by $10 to $100 for the fourth quarter of 2022, citing dented China demand alongside rising COVID concerns. For more on this now, let's go to Han Tan, who is Exinity Group Chief Market Analyst in Abu Dhabi. Han Tan, many thanks for being with us today. So how worrying is all of this for what concerns China's growth and spillover effects on other countries? I'm thinking, for instance, exports and imports.
Yeah, I don't think it's a fresh worry per se. I think it's an ongoing concern that's resurfaced yet again, right? I think clearly the latest headlines have undermined the initial hopes that we've seen, over the last week or so, that China was taking steps towards opening up. So with that apparently, or perhaps not being the case, risk assets are unwinding gains that were predicated on those initial hopes. But I think overall, to the latter part of your question, overall, obviously China's slowdown is a major risk for the global economic outlook, given how reliant the rest of the world is. So as long as China's economy struggles to gain a more even footing in its post-pandemic recovery, then the prospects of a global recession only looms large.
Absolutely, and to the point that also we've seen oil prices falling today, and Goldman Sachs actually cutting its forecast for Brent oil to $100 a barrel for the end of this year. Do you think that's a little bit too optimistic in terms of a prediction? We've cited as dented China demand, but also insufficient details on a price cap for Russian oil. What's your thoughts on that?
Yeah, from my personal take, I'm expecting it to average around that $90 per barrel mark, and again, that's due in part to the demand side concerns that we just spoke about earlier, but of course, the intended price cap that the US and the G7 and the EU are trying to roll out, I think that's another major near-term risk. But to be clear, on the supply side, I do see some supportive elements, supportive in the sense that, it supports, I think, my view of that $90 average for this quarter. But again, with so many supply and demand side risks yet to play out, not just in the coming weeks, but in the months ahead, I think until we get further clarity, I wouldn't be surprised if prices kind of oscillate around that $90 per barrel mark.
Right. Interesting, Han Tan. Mate, thanks for being with us today.
Thanks for having me.